They call trading a game of strategy, but beneath every strategy lies something deeper, something invisible, a mind fragile, restless, seeking control. Most traders think they lose because of poor analysis, but in truth, they lose because of something far more subtle, a single emotional impulse disguised as logic. Today's case is one of those moments. A trader who did everything right. Right entry, right setup, right direction. And still, he walked away with nothing. Because in the quiet moment between profit and uncertainty, he chose safety over growth. He anchored to break even and watched his edge vanish in front of him. This is not just a story about a trade. It's a story about the mind, about the invisible habits that sabotage success and the emotional anchors that keep us chained to comfort. Welcome to Mind Over Markets. Case number 4, Anchoring to Break Even, Missed RR. A real story, a real mind, a mirror for every trader who's ever been right and still lost. He thought he was safe. The trade had already gone his way, 1.5 R in unrealized profit candles, climbing in rhythm, structure, aligning perfectly. Everything was working until it wasn't. He watched as the market exhaled a natural pullback, a breath in the flow of price. And yet that single retrace was enough to wake something deep inside him, a small, restless voice that whispered, "You can't lose now. Move your stop to break even." He obeyed it. The stop moved. And in that moment, without realizing it, he handed control over to fear disguised as safety. A few ticks later, the market did what it always does. It tested the origin, kissed his entry, tapped him out, and then launched in the exact direction he had planned. The setup worked. The idea was right. The analysis was clean. But the profit, the reward, never came. What remained was the same bitter taste every trader knows too well, the pain of being right but not rewarded. This is a story about anchoring to break even, about how a single decision born from a deep need for safety can quietly destroy the edge you've worked so hard to build, and how that innocent move, sliding a stop to entry, is not just a technical adjustment, but a psychological escape. When I first met Daniel, the trader behind this case, he had already been profitable for months. He wasn't new nor reckless. He journaled every trade. He followed his rules. But there was one pattern he couldn't break each time his trade went into profit, and then began to retrace. He'd move his stop to break even far too early. He told himself it was risk management. He said it was protecting capital. But underneath those rational explanations, there was something deeper. A fear of watching profit turn into loss. When I asked him how it felt to see a trade go from green to red, he said, "It's like being betrayed, like the market tricked me." That word betrayed carries weight. It reveals the illusion many traders build that the market owes them something for being right. But the market doesn't betray. It simply moves. Let's walk through the trade. It was a London session on a Tuesday morning. GBP USD. Structure was bullish. Higher highs, higher lows, clean rejections off a 4-hour demand zone. Daniel saw a perfect entry opportunity on the 1-hour chart. He entered long at 1.2605 with a stop below the structure at 1.2585, risk 20 pips. Target 1.2675, a clean 3R play. At first, everything unfolded beautifully. Price pushed up almost instantly. Within an hour, he was up nearly 30 pips already, 1.5 R in profit. He could feel his body relax. Shoulders lightened. Breathing slowed. He was right. The dopamine kicked in, that subtle satisfaction of being aligned with the market. But then price paused. A small engulfing candle appeared against his position. Not a major signal, just a temporary pause in momentum. Yet inside Daniel's mind, the calm began to break. A new voice entered. "If it comes back here, I'll lose everything I've just made. Better safe than sorry." It's fine. I'll move my stop to break even. At least I won't lose. And with a single drag of the mouse, he shifted the stop. Click, protected, safe. Or so he thought. Moments later, price wicked down touched 1.2605 to the pip, closed him out, and then exploded upward, breaking 1.26665 within the next 2 hours. His plan was right. His execution was right. His psychology wasn't. He didn't lose money, but he lost something far more expensive: trust in his process. That's the silent damage of anchoring to break even. It doesn't show up in your balance immediately. It shows up in your belief system. Each time you protect yourself from discomfort by moving to break even, you teach your mind a hidden lesson that you don't trust your edge enough to let it work. That safety is more important than probability. That the avoidance of loss feels better than the pursuit of growth. And so little by little, your subconscious starts associating profit potential with danger. It equates being in a winning trade with the risk of pain. So you cut it short over and over again. Anchoring is one of the most powerful biases in human psychology. In trading, it manifests as emotional attachment to arbitrary reference points. Your entry, your P&L, the last candle. You tell yourself you're managing risk, but in truth, you're managing feeling. Daniel's anchor was his entry price, that single line on the chart he treated as sacred ground. He saw it as the border between safety and loss. When price hovered near it, his nervous system reacted as if survival itself was on the line. Heart rate up, shoulders tense, vision narrow. The irony is that the market doesn't even know where you entered. Your break-even line doesn't exist for anyone else. It's an illusion of control, a personal landmark in an impersonal system. After the trade, Daniel opened his journal. He wrote the same sentence he'd written dozens of times before, stopped at break even. Price hit target after. I asked him to read that sentence slowly. Then I asked, what emotion does that line hold for you? He said frustration, regret. But when we went deeper, we found something else hidden beneath it: relief. Relief that he didn't lose. Relief that he escaped. Relief that he was right even if he didn't get paid. That's the paradox of the break-even trader. He's simultaneously proud of his discipline and disappointed by his results. He confuses the absence of pain for success. And over time, that mindset breeds stagnation. There's a phrase I often use: break-even is the illusion of control. It makes you feel like you've mastered risk. But in reality, you've just transferred your fear of loss into a new container. You haven't conquered it, you've disguised it. You see, the act of moving to break even early is rarely about strategy. It's about emotion regulation. When the market moves against you even slightly, your brain interprets it as a threat to your identity. Because in that moment, your sense of self becomes tied to being right. A pullback challenges that. So subconsciously, you act to protect not your capital, but your ego. The break-even move becomes a defense mechanism, a way to say, see, I didn't lose. I was right. The market just didn't follow through. As Daniel told me his story, I could sense the loop repeating: hope, fear, adjustment, regret. He wasn't losing because of bad trades. He was losing because of good trades, sabotaged by fear. And this is where trading psychology becomes brutally honest. You can't fix this with new indicators or entry rules. You can only fix it by confronting the emotional discomfort you're avoiding, the discomfort of watching open profit shrink, the discomfort of uncertainty, the discomfort of knowing you can do everything right and still not win. That's the truth every trader must face, that trading success isn't about removing discomfort. It's about building the capacity to hold it. I remember asking him one question: when you move your stop to break even, what are you really trying to protect? He thought for a long time before answering. Then he said quietly, my sense of control. That's when it clicked. The break-even anchor wasn't about money. It was about ego safety, a way to feel like he could predict and manage the outcome in a world that refuses to be managed. In psychology, this is called loss aversion, the tendency to feel the pain of loss twice as strongly as the pleasure of gain. But in trading, it goes deeper. It becomes identity aversion. We don't just avoid losing money, we avoid losing the feeling of being competent. And Breakeven provides the perfect illusion: I didn't lose. But under that illusion, growth dies quietly. As we ended the session, Daniel said something that stayed with me. I realize now every time I move to break even, I'm telling the market I don't trust myself. That line stayed with me because it's not just his story, it's every trader's story. We all crave the comfort of certainty in an uncertain game, but certainty is the one thing the market will never give us. So we build psychological anchors, points of reference to make sense of chaos. Entry price, P&L, last week's high, and then we let those anchors dictate our emotions instead of the probabilities we set out to follow. But the market doesn't punish you for being wrong. It punishes you for needing to be right. Daniel's break-even habit was not a trading flaw. It was a human one. We're wired to protect ourselves from pain. Our brains evolved to seek safety over growth. But trading reverses that logic. To grow, you must expose yourself to pain. To build consistency, you must surrender control. That's why trading is not about charts. It's about emotional endurance, the discipline to hold discomfort long enough for your edge to work, the patience to let probability express itself, the humility to accept that being right is irrelevant. Only following process matters. When I looked at Daniel's stats, the pattern was obvious. Over 60% of his break-even trades would have hit full target had he held his stop where it was. His strategy had a 1-3 expectancy, but his average RR, after all those early exits, was barely 1-1. Mathematically, his emotions had cut his profitability in half. He wasn't trading a system anymore. He was trading his nervous system. Anchoring is the mind's tendency to attach meaning to a single reference point and judge every outcome from it. In daily life, it's harmless. You anchor to prices, to expectations, to memories. But in trading, that anchor becomes deadly because it narrows your perception of value. The market no longer moves freely. It revolves around you. Every tick near your entry becomes personal. Every candle that threatens that line becomes a threat to your identity. You're no longer watching price, you're watching your ego fluctuate in real time. Daniel's anchor wasn't just the entry. It was the promise hidden inside it, the promise that this time he would get it right, that this time he would hold to target, that this time he would prove to himself he had changed. So when price came back, it wasn't just his trade being tested, it was his self-image. That's the secret of the break-even anchor. It hides a moral narrative. The trader believes survival equals virtue. He thinks if I avoid losing, I'm disciplined. But discipline is not avoidance. Discipline is endurance, the willingness to feel uncertainty without reacting to it. Avoidance looks like control. Endurance feels like surrender. But only one of them compounds growth. As we talked, Daniel admitted something that every trader eventually confesses in private. He said, "When I move my stop to break even, it feels good for a moment. I feel safe. Then I watch the market hit my stop and keep going, and that safety turns into shame. That short burst of relief is dopamine, the brain's chemical reward for reducing perceived threat. It's the same relief a gambler feels when he walks away from the table before losing. It's the same relief a runner feels when he quits just before exhaustion. Temporary comfort purchased at the cost of long-term strength. And that's how emotional conditioning works. The brain learns that moving to break even equals pain relief. So the next time discomfort appears, it repeats the behavior automatically. not because it's rational, but because it feels safer. Your subconscious becomes the real risk manager, but its metric is emotion, not expectancy. Think about that for a moment. Every time you move your stop without a rule, you reinforce a neural pathway. You're teaching your brain that discomfort means danger and that the solution is control. Soon, the moment a candle retraces, your body reacts before your mind does tightening chest shallow breath, the urge to act. That's not lack of discipline, it's habit. To break it, you don't need more rules. You need awareness. Awareness begins by asking, what am I actually feeling when I see price pull back? Not the words you tell yourself, but the raw sensation underneath. Is it fear of losing money? Fear of regret? Fear of being wrong again? Because until you name the emotion, you can't separate it from the chart. You think you're managing a position, but you're managing anxiety. You think you're analyzing structure, but you're scanning for emotional relief. That's the silent war of trading, not between bulls and bears, but between logic and the limbic system. Limbic. I told Daniel to replay the chart bar by bar and stop the moment he felt the urge to move the stop. When we reached that point, I asked him to describe his body. He said his stomach felt tight, his hands were slightly numb, his breath shallow. Then I said, that's the real stop loss. You're trying to protect the boundary of your comfort zone. If you can breathe through that feeling instead of acting on it, you reclaim control, not over the market, over yourself. Because true control is not the ability to change the outcome. It's the ability to stay unchanged by it. Every professional trader I've met shares one trait. They are emotionally neutral at break even. They don't see it as safe or unfair or frustrating. It's just a coordinate in space. They understand that probability unfolds over many trades, not one. They trade systems, not feelings. But neutrality is not born from ignorance. It's trained through exposure. You must experience discomfort without reacting to it again and again until the body learns that it can survive uncertainty. That's how confidence is built, not by winning, but by enduring. Confidence is the residue of survived fear. So how do you rewire this bias? First, acknowledge it. Write down every trade where you moved to break even early. Note what you felt. You'll start to see a pattern, the same trigger, the same emotional story. Awareness weakens the illusion of control. Second, define objective conditions for moving your stop. Maybe after one full R is locked in, or after structure shifts. Not because it guarantees profit, but because it gives your brain a rule to lean on. Rules are anchors too, but chosen consciously, they replace emotional anchors with logical ones. Third, train detachment. When you catch yourself fixating on the entry, zoom out. Literally, shrink the chart until your trade becomes a small blip in a larger picture. Remind yourself the market doesn't know you exist. Your line on the screen is not sacred. The moment you stop worshiping your entry, you start trading probability. But awareness alone isn't enough. To transform behavior, you must reshape belief. And every belief about trading is ultimately a belief about self-worth. The reason traders chase safety is because somewhere inside, they equate losing money with losing value. They believe outcomes define identity. So when a trade goes red, it feels personal. The mind whispers, I failed. But trading isn't personal. It's mathematical expression through human emotion. Once you internalize that break-even stops being a victory or a failure. It becomes data one of 1,000 iterations. Freedom begins when you stop measuring yourself by individual outcomes. I asked Daniel to repeat a phrase before every session. My job is not to be right. My job is to execute my plan. Simple words, but over weeks they rewired his focus. Each time he felt the urge to move his stop, he repeated it silently. And slowly the urge weakened. Not because he suppressed fear, but because he replaced it with purpose. Purpose is stronger than fear. Purpose gives meaning to discomfort. And when discomfort has meaning, it becomes bearable. Let's pause and consider what break-even truly represents. It's not zero profit. It's zero acceptance. It's the space where traders cling to safety because they haven't yet accepted uncertainty as part of the game. Break-even is purgatory, not loss, not gain, just emotional suspension. You're out of the trade but still trapped in the narrative. Your mind replays the missed reward like a ghost trade that haunts you long after the chart has moved on. That's why you can't sleep after those sessions. You didn't lose money, you lost closure. Closure comes when you fully experience the consequence of your actions without running from it. When you can watch price hit your original stop and feel peace, not panic. When you can miss a trade and still stay present for the next one. That's emotional maturity in markets, the shift from reaction to response. Reaction is instant and unconscious. Response is deliberate and grounded. The difference is awareness. And awareness grows only through reflection, journaling, meditation, stillness after the storm. That's the work no indicator can do for you. Weeks later, Daniel sent me his new journal entry. Trade went 1R, retraced I held, reached full target. Felt anxious but stayed. First time in months I didn't move to break even. There was no exclamation mark, no euphoria, just calm acknowledgement. That's how progress looks: quiet, steady, almost boring. Because emotional mastery isn't dramatic, it's disciplined. He had learned the difference between no loss and true gain. No loss is defensive. True gain is developmental. It changes who you are, not just what you earn. When you understand this, the market becomes a mirror, not an enemy. Every pullback reflects your patience. Every stop loss reflects your humility. Every missed RR reflects your emotional threshold. The goal isn't to eliminate fear. It's to expand the space in which fear can exist without dictating your action. That's the essence of trading psychology, emotional capacity. So here's the reframe I gave him, the one I now give to you. When you feel that impulse to move your stop, pause. Don't fight it. Observe it. Tell yourself, this is my mind seeking safety. Then ask, does this decision serve my edge or my emotion? If it serves emotion, breathe through it. If it serves edge, execute it. Either way, act with awareness, not impulse. Because trading isn't about suppressing emotion. It's about transcending identification with emotion. You still feel it, but you're no longer controlled by it. Most traders seek strategies to make the market predictable. The real mastery is making yourself predictable under pressure, to know exactly how you'll respond when discomfort appears, to remain consistent when randomness unfolds. That's professionalism, consistency of mind, in the face of inconsistency of outcome. When that becomes your standard, break-even no longer seduces you. You stop craving safety because you've built it within. Your stop remains where logic says it should not, where comfort begs it to be. And when price retraces, you don't flinch, you observe. Because you've learned the difference between pain and danger. Pain is inevitable. Danger is rare. Most traders confuse the two. Daniel eventually stopped tracking break-even trades altogether. He no longer saw them as special. They were just part of the statistical landscape, and that neutrality freed his attention. He started focusing on execution metrics, adherence to plan, emotional stability, average hold time. His profitability didn't skyrocket overnight, but his peace did, and ironically, that peace became the foundation for profit. Calm mind, consistent action. Consistent action, compounded result. That's the real edge. By the time we finished our work together, Daniel had rewritten his internal definition of success. He no longer said, I didn't lose. He said, I executed. And sometimes that single word is all it takes to transform your trading life. So the next time you're in a trade and price starts to pull back and that whisper rises, Again, move to break even, stay safe. Remember this: safety isn't in the chart. Safety is in your capacity to remain grounded while the chart moves. Let the candle breathe. Let your plan play out, and let the discomfort be there untouched like a wave passing through the body. Because when you can do that, you are no longer trading for money. You are trading for mastery. He told me something at the end of our last session. He said, "It's strange. I thought discipline was about control, but now I see it's about surrender." That realization is where transformation begins. Most traders believe the goal is to control emotion, to suppress it, outthink it, outplan it. But control is just another form of fear. It's the ego's attempt to manage uncertainty. And uncertainty is the one constant the market guarantees. You can't control what's uncertain. You can only learn to exist peacefully within it. That's why trading becomes more than a profession. It becomes a mirror, a spiritual discipline disguised as speculation. Every entry, every loss, every missed RR isn't random. It's feedback. It's the market showing you exactly where you resist reality. Think about it. The break-even anchor isn't a market event. It's a psychological threshold, the exact point where the trader's comfort ends and his potential begins. Beyond that threshold lies freedom. But freedom demands vulnerability. To trade freely, you must let go of the illusion that safety comes from outcomes. Safety and truth comes from self-trust, from knowing you can face whatever the market delivers without collapsing into fear or greed. That's the lesson Daniel learned. And it's the lesson every trader must learn in their own time, often through pain. I often tell traders, the market is not trying to hurt you. It's trying to show you where you're still afraid. Every emotional reaction, fear, frustration, hesitation, is a signal, not a flaw. It points directly to the belief that's limiting you. If you listen, if you stay curious instead of reactive, each emotion becomes a doorway to growth. But most traders slam that door shut. They distract themselves with new systems, new indicators, new screens. They seek intellectual solutions to emotional problems. They chase strategies because it feels safer than sitting still with discomfort. Yet mastery lives on the other side of stillness. When you stop running, you start seeing. Daniel's journey wasn't about perfection. He still had break-even trades. He still felt fear. But the difference was subtle, powerful, permanent. He no longer believed the fear meant something was wrong. He stopped treating emotions as enemies. He started treating them as signals, data from within. And when he stopped fighting himself, the market stopped feeling hostile. It became neutral again, just movement, just information. That's when trading becomes flow, when your internal state and external behavior align. When execution happens naturally without resistance, that's when the charts go quiet and you finally hear your own mind clearly. Let's go deeper into that word surrender. In most people's minds, surrender means weakness. In trading psychology, surrender means alignment. It's the state where you stop needing to force the market to validate your expectations. You let the process unfold not because you don't care, but because you trust your preparation more than your emotion. Surrender doesn't mean giving up. It means giving in to probability, to impermanence, to truth. You begin to realize that the market is just a mirror of your inner state. If you're anxious, it shows you volatility. If you're greedy, it shows you temptation. If you're calm, it shows you rhythm. The market becomes whatever you bring to it. So the work is never about predicting price. It's about mastering presence. I remember asking Daniel after his first month of consistent execution, what changed? He said, I stopped measuring progress by my P&L. I started measuring it by how calm I felt when nothing went my way. That's it. That's the shift. When your emotional state no longer depends on the chart, you've won a battle. Most traders never even fight consciously. Because the real game isn't between buyers and sellers, it's between awareness and impulse. And awareness wins slowly, one breath, one trade, one moment of restraint at a time. He started approaching the market differently. No more checking trades every minute. No more dragging stops impulsively. He entered, placed his stop set, his target, and walked away. The first few times it was excruciating. He said it felt like leaving a child alone in a storm. But eventually he noticed something new: silence. The silence that comes when you stop negotiating with fear. The silence that allows clarity to grow. That silence is where true trading psychology lives. It's not loud. It's not motivational. It's grounded, present, almost sacred. Let's reflect on what anchoring to break even really reveals about human nature. At its core, it's the inability to sit with uncertainty. Humans crave narrative closure. We want a story that ends cleanly, win or lose, right or wrong. But break even gives no closure. It's the gray zone. And the human mind hates gray zones. We crave finality because uncertainty reminds us of our vulnerability. But vulnerability is not weakness. It's the birthplace of every authentic decision. Without vulnerability, you can't risk. Without risk, you can't trade. Without trade, you can't grow. So the irony is clear. The very thing you're trying to avoid, vulnerability, is the very path to mastery. When Daniel finally understood that he stopped seeing the market as something to conquer, he started seeing it as a teacher. Every trade became a conversation with himself. Every loss a reminder to refine his beliefs. Every win a test of humility. And every break even an invitation to look inward rather than outward. He said, the market hasn't changed, but I have. That's the truth of trading psychology. Nothing external needs to change for everything internal to transform. So what about you? How many times have you moved to break even thinking you were being smart only to realize you were being scared? How many times have you called it discipline when it was actually doubt wearing discipline's mask? How many times have you said, I protected capital, when you were really protecting comfort? There's no shame in it. Every trader does it. But awareness is the moment the pattern breaks. When you see the pattern, it stops owning you. And when it stops owning you, choice returns. Here's what I want you to remember. Every time you feel that impulse, that sudden urge to move your stop to save yourself from uncertainty, pause. In that pause lies power. It's a small window where awareness can enter before habit takes over. In that space, you have a choice to react from fear or to respond from trust. One leads to break even, the other leads to growth. The difference between the two is not knowledge, it's courage. Trading doesn't require bravery once in a while. It requires micro acts of courage repeated thousands of times. Every decision to hold steady in uncertainty rewires the nervous system. Every moment of patience stretches emotional tolerance. That's how you build resilience, not by reading books, but by staying present through discomfort long enough to dissolve it. Pain becomes information. Information becomes insight. Insight becomes peace. And peace becomes profit, not just in money, but in mind. When you master this, your relationship with the market changes forever. You stop chasing setups that promise comfort. You start choosing setups that challenge patience. You stop fearing pullbacks. You start respecting structure. You stop hoping. You start observing. Break even stops being a trigger. It becomes a teacher reminding you that neutrality is the ultimate edge, because neutrality allows probability to play out undisturbed. When the mind is neutral, execution becomes clean. And when execution is clean, results take care of themselves. Daniel's story ended quietly, just as most transformations do. No fireworks, no grand realization, just calm awareness replacing compulsive reaction. He didn't conquer his fear. He befriended it. That's what maturity looks like. Not fearlessness, but friendship with fear. Not absence of emotion, but mastery of meaning. And once you learn to do that, break even becomes what it always was. Just a number, nothing more. Now take a breath. Think about your own journey. How many trades have you lost to the need for control? How many RR ratios have slipped away because you couldn't tolerate uncertainty for a few more minutes? What would happen if you built the capacity to stay, to wait, to trust? What would your trading, your confidence, your peace look like if you no longer needed the illusion of safety to feel secure? That's the question that transforms traders into professionals. That's the bridge from technical skill to emotional mastery. So next time the market tests your conviction, remember, the test isn't about price, it's about presence. Can you stay centered while everything around you moves? Can you act with clarity while chaos unfolds? Can you let go of control without letting go of discipline? If you can, you've already won. Because the true victory in trading is internal the moment your emotions obey your awareness instead of the other way around. When the video ends, when the screen fades to black, I want you to sit in silence for a few seconds. Listen to your breath. Feel your pulse. Notice the calm that comes when you stop chasing certainty. That calm is your edge. Carry it into your next trade. Carry it into your next decision. Carry it into your life. Because the market will always test your discipline, but only you can choose how deeply you're anchored to fear, to comfort, or to awareness. Choose wisely. And remember, break even is not safety. Break even is hesitation. And hesitation is the space where potential dies. So breathe, trust your plan, and let the market move. Every chart is a reflection, not a price, but of the person watching it. We don't trade markets. We trade beliefs. We trade patience. We trade the space between impulse and awareness. And in that space, every decision becomes sacred. Every hesitation becomes a teacher. Every loss becomes a lesson in letting go. When you understand that you stop chasing perfection, you start cultivating presence. And that's when trading stops being a pursuit of profit and becomes a practice of consciousness. Remember this, markets don't care who you are, but they will always reveal what you are. So the next time you find your finger hovering over that stop, ask yourself, am I protecting my capital or my comfort? The difference between those two answers is the difference between average and mastery. Thank you for watching. This is Mind Over Markets, where trading ends and awareness begins.